Hey, hi guys. This is Russell Funas. Um, we are here today to talk about this important topic that I introduced since yesterday for business owner and self-employed people. So, if you're new to this channel, my name is Russell. I'm an able agent and I'm specialized in accounting and tax strategy for small businesses. And recently I've been dedicating myself and my team on helping a lot of business owners, to get this PPP money and also the ARD that is still going on, by the way. So the reason we have this meeting today, normally this is a weekly meeting that we have in the Facebook group, but today I'm giving the opportunity for other people to share this important topic that concerns business owner and expenses. Basically, business owner and the saving in taxes every year, because nobody wants to always be paying money for free to the government. The government will also be happy when you give them money, but they will never say thank you. So if there's a way for you to pay that money, the less amount possible, it will be a good thing. That's the reason why I came up with this topic, which is the three common mistakes self-employed people and small businesses make every year, and that costs them thousands and thousands in tax bill, basically. Okay, so if you guys are ready, let's go. Most of the time, those three common mistakes could seem like normal thing, and some people may think that, okay, what are those mistakes? Those mistakes are so common and so obvious that when we talk about it, some people feel shocked, but most of them still are unable, to take action. And the goal I have here is to have you guys start thinking differently when it comes to those type of mistakes. You can avoid those mistakes by not spending money, just by having a new way to conduct your business. That's the point I want to share with you here. So basically, what you have to do is to listen. At the end of it, you have to think about, go around what we are going to explain now. You can do it by yourself, but in case you cannot do it, your accountant or your tax professional will actually help you to do that. That's the point. That's the point I want to make here. That once you learn about those mistakes, you have to actually think about if you can find yourself among those three mistakes. If you don't find yourself, congratulations, because not all business owners, self-employed, individual people are not organized. It's just a matter of organization and seriousness about what you are doing. Okay? So basically, we're going to jump right away into those topics. The first one will be what? The first mistake that, every percent of people that are helped, because I'm most of the time when I come with webinar or video or live, is because when I'm consulting with those business owners to help them with their taxes, that's what I notice. And sometimes that is how I come up with the idea of running some type of live or webinar, so that not only it will address the issue for them, but it can also address the same issue for all other business owners who may have the same type of problem. So very quick, what are the three common mistakes? The three common mistakes. Of course, there might be hundreds of them, but the three that are more often observed common mistake that people make. The first one What are the 3 common mistakes? The first one is no record keeping. The first one is no record keeping of your activity. That's the first common mistake that many business owners make. The first one is no record keeping. I mean, I have helped other 700 business owners now to get the PPP and EIDL money. Among them, not even 85%, not even 15% of them were keeping the transaction, were doing good record keeping of the activity. Okay? And it cost them money. It cost them a lot of money. Why? Because the first thing is the risk. When you are running a business, you have to avoid any type of risk that you can avoid. The first thing is the risk of an IRS fine. That's the first thing. You don't even see it. The first thing is that you are in the risk of being fined by the IRS in terms of audit. When you are running a business, okay, over here I'm talking about people who have an incorporated business, an LLC, C Corp, S Corp. When you look at your article of incorporation or maybe the operating agreement of your company, if you read it, most people don't even read. If you read it, the bookkeeping system, the record keeping of your activity is a requirement by the law. That means you are exposing yourself to a possible fine. I remember last time, 3 years ago, there was this eye doctor office. They were fined almost $50,000 because during the audit they didn't have no record keeping. They have to come up to us to actually create a record, create a bookkeeping for 1 year, and actually show that they don't even have. Actually, they didn't have to pay taxes, but the government wanted to see that yes, your tax that you should pay is only maybe $50, but they want to see how you can show them that your taxes is only $50. So they have to spend around $10,000 with us for us to, in 2 weeks, create the whole bookkeeping, create the organization structure, everything into a bookkeeping system, and show them to the government, because they have 2 shots. When they come to, they give you 1 or 2 weeks to come back with the response. So they have to do that. Otherwise, they will be fined $50,000 for that. So that's the first thing. But it looks like, it doesn't seem like being scaring a lot of business owners. But what is very important that business owners are really losing, is the loss of deduction that you don't remember. Okay? The loss of deduction that you don't remember when you don't keep your bookkeeping, when you don't keep your financial transaction. And mostly expenses. Last week, I think it was 15 minutes webinar where I was talking about the consequences of losing money or how to save money by keeping your book. So if you want to get the full detail of what I'm talking about, go back and watch that live. It was 15-minute live where I was explaining how not keeping your book makes you losing money. It prevents you from saving money, basically. Because listen, I have somebody here who came to me and said, okay, what are your expenses for the year during the taxes? They come up with I don't know, most obvious expenses, but there are so many other expenses that you will not even remember if you don't write them down. That's the point. If you have a business, any type of business, whether it's an incorporated business or it's a self-employment business, that means the business that you are operating without actually, the need of incorporating, of creating an LLC, for example. Because a business is any time that you do that generate money. The business is not always when you have an incorporation. Most people will get confused at this point. When you are a business owner, it doesn't mean that you have an C Corp, S Corp, LLC. As long as you are operating an activity that generates the money, and then you know that will be the money that you want to claim to the government, you have to take it seriously. So basically, what happens is that anytime that you have a business, you have to keep track of all your expenses. Over here, I'm not even talking about the income. The income will be the next section of this webinar. So over here, when you don't keep your expenses, what will happen is that there are let's say you travel to New York. During the trip, you have to stop at the restaurant, you eat, you go there for business purpose. At the time you remember, when you come back, you have the receipt, you have the train receipt, you have everything. But over time, after 1 or 2 months, you don't even remember what the receipt is. Or if you know what the receipt is, you don't remember exactly what came into it because you have only one receipt, but you spend a lot of money along the way. Every day you are fixing your car, you are repairing your car. If you don't record every day how much you are spending on your car, if you don't record every day how much you are spending on the oil change, if you don't record every day how much you are spending on the food that you are consuming in your job place, chances are that you will never remember for sure the amount of food that you spend on during the year. And those are what are called loss of deduction that you don't remember. Because as a business owner, at the end of the year, you are entitled to deduct expenses on the gross income that you make. Only when you deduct expenses that you come up, then you stay with the net income basically. That net income will now allow you to actually know how much you will be charged for taxes basically. So what I'm sharing here is that whenever you don't record your transaction, chances are that you are overpaying in taxes because you are losing a lot of opportunity of claiming expenses. Okay, the supplies, you are purchasing supplies every day. The people who has the beauty salon, they purchase hair, they purchase a lot of stuff. Now we are using sanitizer. Every day people have to order new hand sanitizer, everything to make the workplace clean and COVID-free area. So if you don't think that you have to record your transaction, you are losing a lot more money than you think you are saving. Okay, most people don't. The big thing, you know what the big thing is? Is that your rent. If you don't record your rent, I have people here who, when I look at the Schedule C, I look at the Schedule C as maybe, let's say, $40,000 as a gross Schedule C. Out of the $40,000 gross, that's what they're claiming. And it's taking me to the next point. There's no way you can even claim your rent because you have a workplace, you have a repair shop, you have a supermarket, you have this. You are claiming $40,000 as a tax, as a cost. How are you going to claim your maintenance, the maintenance of your car? How are you going to claim your rent if you pay only $1,500 monthly? $1,500 monthly. At the end of the year, this is around $18,000. Of course, there is no way you're going to claim $18,000 expense only for one item out of the $40,000 gross income. The $14,000, when you are selling something, if you are selling something, the higher cost will be how much you purchase. It will be your raw material and the cost of purchasing the thing that you are selling. So basically, this takes me to the next point. The next point is that people tend to hide income. That's the next mistake that people do, business owner, right? They tend to hide their income or to underreport their income. When you are underreporting your income, what happens? The first thing, and when you have an habit of doing that, the first thing is that you will never know about the really health or the really performance of your business. That's the first thing. You will never know how good is your business. Because you are making sales doesn't mean that your business is profitable. Basically, you are running a business to be profitable, not only to make sales. If you are making sales and you don't record those sales, because you're going to underclaim and state your sales. First of all, you have to match those sales with your expenses to know if the business is profitable or not. You don't just have to, just making sales and look at your bank account, you see the money, you see the business is good. The level of your bank account is not the reflection of your company. I mean, the balance of your bank account, it will never be the reflection of your company, because that's the reason why on the monthly basis, you have to do what is called bank reconciliation. Because in your bank account, you may have $1 million in there as a balance, but you may also be missing a lot of payment of supplier that you have not made yet. That means if you have millions of dollars in your account, and then you still have outstanding invoice from supplier of $900, it means your real balance is actually $100, right? So how do you know that? You know that because you have the reconciliation of your bank account, and you only do that if you have your records. If you can record, if you have a trace of all your transactions. And some people even forget about money. Okay, not recording. I have people who forget about money. That means when you are making a lot of sales, some sales that you make, you don't get paid the same day. You get paid over time. That's the reason why we have what is called account receivable, AR. The AR is because when you are selling goods or services, sometimes you can get paid after 1 or 2 weeks, sometimes even a month, depending on the agreement with your customer. So when you are hiding your income, the first thing that you are doing is that you have no clear vision of your own business. You have no clear vision of your own business. Yes, and what you are also losing is that there's no way you are losing in terms of potentiality of funding by bank or by new shareholder. Okay, so if you have a business, you want to expand. Some people are expanding their business right now because of the COVID-19. I mean, I've been saying that the COVID-19 will either break you or make you. Some people, the COVID-19 is making them at the point that they are actually expanding their business. So if you want to expand your business, expanding means that you have to create new things, new facility and stuff. You need most of the time you need funds. You don't always need the funding from your company, right? Most of the company will expand or will get to the next level of their growth with new investment. The investment will be from the bank with a loan or from a new partnership. You know, people will get over to your company and get some percentage of the share of the company. If they want to come to partner with you, you have to tell them. Let's say you are even keeping your record. You keep the record of the transaction, but now you come here and you hide your income. That means you don't even show all your income in your financial statement. Let's say it like that. Do you really think in your income statement? Do you really think the new partner will think that your business is good? Even though you know that you're making $1 million of sales every day, no one will partner with you, and that is an opportunity that you are losing. That is what we need to know. It's an opportunity that you are losing whenever a bank cannot see you as somebody who can pay back his debt. Let's say you want $100,000 or $200,000 from the bank. You know that you can pay it back. But if the bank is asking for, your income statement, they don't see no income on it. That's no income. There's no way you're going to get those funding. Now, when you don't get funding, you are losing on opportunity. You are losing on money because you are losing the business. Now, on the tax-wise, what happens is that when you are hiding your income, it comes back to what I said earlier. When you are hiding your income, there's no way you can claim all the deduction that you can have. I'll talk about rent. I'll talk about, besides rent, what do we have? I'll talk about repair.
Car maintenance. Car maintenance.
Car maintenance, yes. Car maintenance. That means everybody is maintaining the car. Whether it's a new car, we see brand new car, go back. You have an expense, like sales expense. Today, there's no way you can sell without spending money. There's no way now you can actually make a sale, even though you have the best deal, the best product in the world. There's no way you can sell without incurring new sales expense. You have the marketing is a strategy now to make money. Whether you are, it's good because you can reach out to new customer. When you are hiding your income, this person who claimed $40,000 as income because in their mind, oh, I don't want to pay more taxes. I don't want to pay more taxes. So over here, you are claiming $40,000 because you don't want to pay taxes. Of course, you're gonna come down here to maybe $18,000 taxable income. What you don't know is that if you will have recorded all your transaction. If you have record all your transaction, you have even record all your income. The first thing is that you will have been able to claim there's always more income, more expense than we think we are making. Just like if you are making $100,000 a year as an individual, let's say $70,000, okay? You are making $70,000 a year. Okay, at the end of the year, you are going to file your taxes. What happened? They tell you that you're going to pay maybe $4,000 taxes. You are paying $4,000. When they say that's the tax bill, it's because what was collected was not enough. I mean, the real tax bill is around 22%. What does that mean? It means 22% of $20,000 what? I don't have a calculator here. But it's a lot of money, more than $4,000. That means you were collecting a lot of money during the year. Now, what did you do with the $70,000? Because most of the time, when you look at the bank account, people who have the $4,000 or even $1,000 bill, they always ask for a payment plan. Why? Because they don't have the money in the bank account. I'm talking about one single person. That means you, yourself, first personal expense. When I ask them, what did you do with the $70,000? Nobody knows. You know what is the bigger expense? The bigger expense that everybody makes. Every individual, not even at the business level. Every person during the year, the bigger expense, even when you are applying for a line of credit, what do they ask you? They ask you for how much you pay for rent. Remember, I talked about rent earlier. If I want to talk about rent again, you pay $15,000. That's not average rent. 1,500, sorry, times 12. That is around 18,000. So out of the $70,000, the bigger expense is 18,000. So what did you do with this money? Nobody knows. But if you have to check his head and his mind and trace every single day for the whole year, you will see that he spent that money. But he doesn't really know where he spent the money. Right? Nobody knows. What I asked, what did you do? Did you purchase a new car? No. What happened? What did you do? Sometimes the person is living on the financial aid. Maybe he didn't have a loan, student loan, because he was going to school. The income didn't allow him to be eligible for financial aid. So he even has a loan on top of that. But he doesn't know what he did with the money. What about the company? The company is an entity that spends money every day. Every day, sometimes you don't even know when you spend the money, because you might be spending money on payroll. You might be spending money on furniture. You might be spending money on electricity. You might be spending money on a lot of stuff, on supplies. So you don't really know how much you are spending. So over here, if you have to match your income with your expenses. You may still come with maybe the $18,000, but guess what? You have a better company here that you can even sell. You hear people selling the company, even though you have only $18,000 profit here, but your gross was $700,000. You still have $18,000 profit here. This company is worth it more than this company that is claiming $40,000. The point is not to think about hiding your income. When you hide your income, there are so limitation of what you can actually take as a deduction. And sometimes it's ridiculous. I saw people here coming here on their taxes, and they just claim the gross income, $16,000. I don't want to talk about the people with the name. They claim $16,000 as a gross. What are they going to do? Because they just want to pay taxes on $16,000, they bring the same $16,000 down as a net. Can you imagine? I mean, he or she, I don't want to say the person, he claims $16,000 as a gross, right? And on the net, he claimed another $16,000, just like it was a salary. That is crazy. Why? Because you, as a net income, as a business owner, your net income, you are paying $15,000 on what is called self-employment taxes. A lot of people don't know. Self-employment taxes, you are paying $15,000 on it. Self-employment taxes. That means if this $16,000 was for her to pay herself, and it will take me to the last point. This $16,000 a year net income that she's going to show as a taxable income for her, she's paying 15%. When I say 15%, it's about Social Security and Medicaid. So Social Security and Medicaid, you as an individual you only pay half of it, but the business owner pays 15%. He pays the whole thing, which is about 15%. That's why I'm saying she's paying 15% of this $16,000 because she's trying to say, oh, I just want to claim 16,000. What if you want to understand better? If you take the same 16% and you are a tax professional, you plug it as a W-2 income, you will see that your tax refund will be higher. Then the same $16,000 was reported as a Schedule C income, profit or loss of business income. So that's where a lot of people are just getting lost, right? Because first of all, it's so obvious that you are exposing yourself for audit. And I was talking to, I don't know if the person is online now, I was talking to him and said that what you are showing there is a big red flag, right? It's a big red flag because the IRS audit sometimes is a software. The software, just like this EITL, I told a lot of people that people are receiving denial alert because sometimes the software see your application as crazy, you just kick it, essentially denial alert. That's the reason why in the Facebook group I show everybody how to come back and apply for reconsideration. Right? We're going to discuss about that maybe at the end of this meeting. So over here, I told the person the number I see here, first of all, is preventing you from being eligible for what you're supposed to get because the VITL money, remember, those who are the money, the higher your gross, the higher your eligibility. So the person was losing in terms of eligibility because the claim is income. I don't think it was intent. He said that, or the person did that just did it for him. So I told him that it's a big red flag. As we were talking, and he told me that yes, I actually received the letter from the Maryland state. The person actually lives in Maryland. So I'm like, you see, I don't even know you. I mean, I don't know. I didn't know whether you have the letter or what. When it started with the Maryland State Department, Tax Department, the Maryland will actually send it to the federal. And they will audit you. And when they audit you, most of the time they will go back. They will know that that's the same thing they have been doing over and over. Sometimes they will go back 1 or 2 years, depending on how quick you are responding, right? So the point is that when you are hiding your income here, you are limiting yourself in how much you can claim. I just told you that somebody making $70,000 a year, at the end of the year, he has nothing in his bank account. Almost nothing. But it didn't make a big expense. I don't want to go into what he has lost in terms of tax planning. I don't want to go into that because out of this $17,000, he could have still spent the whole money, but get this money being brought down to maybe 50%. That means if he had consulted a tax professional, The type of individual who have, I'm talking about an individual person who have told him what are the bigger expenses that he's making, and we have helped him to make this $70,000 becoming $50,000. That is $20,000 taxable income saved. If you want to take 20% of $50,000, you know how much money it is. So yes, that is the point I want to make here. So the last point I want to make is that when you don't, the third mistake that people do is that they don't account for, they don't account for their own compensation. So they don't account for their own compensation. Remember over here, when you're claiming $40,000 a year, you can't even claim your own rent. What about your own compensation, owner compensation of your business? So a lot of business owners, I'm talking here sometimes even bigger companies, but that are owned by partners, they don't even account for owner compensation. Owner compensation could be a guaranteed payment, it could be a draw, it could be a payroll, right? The obvious one that gives you a very clear possibility of claiming in your taxes is what? It's the payroll. It's the payroll. It's the payroll, right? I just told you that when you don't claim all of this, you are losing. You are losing on rent, on repair, on sales tax. I didn't even put down here what I just put here, your own compensation. I didn't even talk about your own compensation right here. If you are a business owner, you should pay yourself. The result of your business is not your payment. No, it's the return on investment. If you have a company that you are spending millions of dollars, at the end you see the net income is I don't know, $500,000. $500,000 is not your salary. It's the return on investment. You should have accounted for your own compensation before you get to the $500,000 profit. Because it could happen that it doesn't belong to yourself. It could happen that you even sell the whole company. Some people create a company and then they sell the company. They're still in the company. And they're still making a lot of money because they have a salary, they have a payment in the company. So the profit is just the return on investment of all the money that they put in the business. So if you don't actually record your income, you don't record your transaction, you don't hide and you're hiding your income because you don't want to pay a lot of taxes. The most thing that a lot of business owners out there are doing is that they don't account for their own owner compensation. I'm going to take a really simple scenario here for you guys to understand. If you are working on your business, let's say you pay yourself, you don't want to charge yourself too much, you pay yourself let's say $20. You pay yourself $20 per hour, right? If you have to time it by 4 weeks, that is how much? 8. That is $800 every week that you should be paying yourself every week. If you have to time it by 52, how much is it? You have 4160. That is $41,060 that you're losing in your business. Me, I work $150 per hour. That's why I get paid for my consulting. $150 per hour. So I don't know if I have to, on my paycheck, of course, maybe I'm not going to put 150,000 per hour, even though I charge those people. Of course, what I'm charging them is not my salary. That is the cost of selling a service in my company. My company now can hire me for maybe $50 per hour, right? Because I'm working for my company. Even though when I'm charging people, it's not my salary. It's because it's the sales of the business. Because out of the 150, maybe there are 50% for my own salary, maybe 100% is for the rents, and it's for the cost of renting, it's the cost of the equipment, the cost of whatever other cost that the business can do, right? So, me, if I have to work, of course, if someone has to hire me, it's not going to be $50 per hour. It's going to be around this thing. If you want to hire me for your company. Now, I'm bringing everything down to $20 per hour. So any job you're making, if you have your own company, you're not going to pay yourself $12. Are you going to pay yourself $12 for the company within your company? You can't, right? So if you are so generous that you pay yourself $20 per hour, $20 per hour here, that is for a 1,060. So somebody here who has a very beauty supply shop, a very hair salon, that is actually employing 4 people. That means she has 4 employees. But you are claiming $40,000 per hour per year. Not only you didn't account for all the payment that you paid to the people working for you. You don't even know how much it was, because whenever I ask people, how much did you pay? Because the employer are not on the payroll. If you don't record your transaction, how are you going to put people on the payroll? You're not going to put them. That means you just pay them every week. There's no way you're going to claim those money. I'm talking about spending $500,000 to people. $500,000. I have people who pay $500 to the people working for them. $500. So imagine that you are spending $500 every week on one person only, helping you in your business. Whether it's a repair shop, it's a supermarket, it doesn't matter the business. $500 you spend it on somebody every week. Times 52. No, times 40 first. How much is that? That is times 40 hours. No, don't say that 40. Let's say times 4, because this is only weekly. Okay, if it's weekly, we make it 52. Right? Because 1 year has 52 weeks. So 500 times 52 weeks, how much money is that? That's a lot of money. I'm trying to look for the calculator. 52 times 500. That's $26,000. $26,000. That means it doesn't matter how much you claim on your net profit. You should have had a lower taxable income if you have claimed this $26,000 on it. Now, how to claim it? If you don't record your thing, if you don't even put them on the payroll, okay, you're losing them. Now I'm talking about yourself. You are working on the business, right? You work on the business. You are spending, you are losing for $1,000, for $1,600 on business, on your own compensation. You don't take it. What do you think you are losing? You are losing. This is what you are losing, right? You are losing because you are paying income. You are paying taxes on this money. You are paying taxes on this. Whenever you don't claim an expense, it means you are paying taxes on that money. If you are on the 22% tax bracket, because when your income is between 39, I think it's 39 to 84, 39,000 to 34,000 to 84,000, you are on the 42% tax bracket. If you are, this is what you are losing, what you are paying basically. 22% of this is around 9,000. So this is $9,000 here that you are losing. Losing means what? It means that you will keep it for you, or it will be a refund for you. This is what it means. Because you don't pay doesn't mean that you're not losing it. You're losing it because you are not taking the opportunity to actually claim it for you. Okay? Whenever they say you're losing in taxes, it means that not only you are paying more than you should have paid, or you are receiving less than you should have received. That's what they say losing in taxes. So over here only you're losing $9,000. Over here, now we're recording the thing. There are so many other expenses that you're not taking. Now you are taking your chance to be on the risk, because all the information that you claim on your taxes, there's no way you can even prove. That's a big issue. There's no way you can prove. And if you don't, since you cannot prove nothing, there's no way you can also leave your financial statement blank without expenses on it. That's the reason why some people will just think about how much they want to claim in taxes. They just go and slam an amount of money inside, right? And they keep the money, or they just deduct a few expenses, they get something down. You are losing more than you think you are saving. This is the point I want to make here. And I've been spending more time than I was actually anticipating. So there's too much into it that we cannot even explain into a single webinar. So I'm going to stop here. If somebody has a question, you can ask before I move or conclude this. Do you have a question? You can unmute yourself. You can unmute yourself if you have a question. Okay. If nobody has a question, what I'm going to do here is that I'm going to beg you, if possible, to actually start taking the new step if you are a business owner, right? If you are a business owner, start reverse engineering on what you are doing if you really want to save money in taxes. And now you have to think about, know how to rate your information, the information that are in your taxes. That is really important thing, because I have people here who have their income, who have the 1099. The 1099, sometimes they claim one, they keep the other one. You take your taxes, you don't really know. That means you are actually receiving more money than you should have received, because there's a missing of income in your taxes. Okay, what is like that is a big risk of red flag, because any 1099 that you receive, the IRS has a copy, because whoever company issued 1099 to you, the IRS has the same copy as an income, and they are expecting you to actually claim it in your taxes. I have a lot of people. Somebody has $40,000 on one 1099, $30,000 in the other 1099. Now the person came here on this situation. They didn't hide it, but they took one 1099 here. They put it on the W2 income, and they put this one on the Schedule C. They put this on the W2 income, and they put this on the Schedule C. The point here where the person is losing when they put the 1099 on the Schedule C is that you are hopefully paying taxes on it. It's better that you are on the Schedule C, on the payroll, because your company, you pay yourself payroll. You shift the business money into your payroll money. It's not a 1099 given to you by an external company, because when it's like that, you are losing. There's no way you can claim expenses against this. This is a W2. It's just like your job gives you W2 at the end of the year. You have to take reduce the car repair. You repair your house. All these expenses, you can't take that. Your W2, the government gives you the what is called standard deduction, right? To reduce your W2, but you cannot claim all the things to make it a loss. This $40,000 could become a loss. Then you can actually come up with $45,000 expense. And this $40,000 will become only negative $5,000. And the negative $5,000 will actually go back and reduce whatever other source of income you have. And that's how you're winning, right? So I told him, did you even read your taxes? Where did you get, I didn't work nowhere. How did you record it on the wage? They call it gross wage. On your taxes, the line 1, gross wages. They put 30,000 on it. So that's how he was losing. He was losing on the opportunity of claiming more expenses here, right? So it's for you to think about understanding about your taxes. I'm a tax professional. I don't do taxes to make it magic to people. I always try to have people understanding what is happening in their taxes. It helps me in my job because if it's easier for them to understand the tax situation, it's easy for me to give them the outcome. Because the outcome could be that you receive the refund. It could also be that you are paying money. If you understand your taxes, the content of your taxes, then it's easier for me to convince you that you owe $7,000 to the government. But a lot of tax professionals, they are losing on this because they don't want you to understand. Now it's hard for them to tell you that you have to pay the government $4,000. Then you will think that he's not a good tax professional because he's just telling you, just throwing at you that you owe this money. They say, why? Because you didn't collect enough money. No, that's not the reason. You have to go know the details of your taxes. Now over here, what I wanted to let you know is that over here you are losing. Unless you are not incorporated. That means if you are just a self-employed, that means you don't have your business incorporated, then you cannot do this. It will be difficult for you to do this because the IRS doesn't even know you. The state doesn't know you. How are you going to say, okay, I'm paying myself? You're not even a company. You just can't do that. That's an income. In order to take this, you have to incorporate your business, make it an LLC, to make it secure. That means it's protecting your own personal asset. You know, the LLC is a company, is a company structure that protects the owner of the business. If the business has a problem, the business owes money from somebody, right? You cannot touch them. I have one of my car that was hit by someone, and the car belonged to an LLC. If that LLC is out of business, we're not going to, even though it's not out of business, and they don't have money to pay you, you cannot go and have the owner or the LLC say, okay, my car, you hit my Mercedes, it costs $100,000, they don't pay me. You know what I'm paying? If they say, this is all what my business have, I can only afford this, then there is no way they can get to your personal belonging. So you have to incorporate your business. It doesn't cost a lot of money. It doesn't cost a lot, it doesn't take time to incorporate your business. If you are making money, you want to actually account for your own payment on the business you are doing. Incorporate your business, it takes you 24 hours to get all the paper. Then you can take this. If you are actually in the business when you are, providing service, you have a business incorporated, whether it's an S Corp, C Corp, an LLC, you are better off. Let me admit these two people in the webinar, even though it's the end. You are actually losing money. So if you never account for your own compensation, tell yourself that you are losing $9,000 every year. As simple as that. Because it doesn't matter what you are claiming on your Schedule C. You are losing around, and if you are supposed to say, okay, I think on my business, I need to pay myself $22 per hour, then this goes up. Just as simple as that. When I say goes up, it means that if you have done this, you normally receive $3,000 refund. You should have received $3,000 plus $9,000. How much are you willing to pay for this? You're not even paying nobody to do that. You're not paying nobody to do that. You just put yourself on the payroll. It's not this. Okay, this could be a tax strategy because when we consult on tax strategy, we can actually see everything and tell you how we're going to do it, how much generally you're going to save. It could be a tax strategy. But I'm giving it to you now. The only thing you have to do is to put yourself on the payroll Put your wife on the payroll. Put your children on the payroll. Very few business owners know that. Put all your family on the payroll and cut all your expenses. So I'm going to stop here because I didn't plan to go that far. Okay? If somebody has a question about how to... Yes.
Yes, you are saying that to put your wife on the payroll. What about if your wife already have a job? So what should you do?
You know you can have 3 or 5 jobs, right? You, yourself. Why can your wife has 2 jobs? As long as you claim your wife on the payroll, you claim an activity that your wife is doing. Let's say you say your wife helped you to receive phone calls. That's it. How much can you pay somebody to receive phone call for you? Google, how much can I pay someone to receive the phone call? It's around $12 per hour that you can claim. Right?
Mm-hmm.
Yes. I'm not saying to say that you pay your wife $50 per hour for doing nothing. No. You have to think about something. Okay, let's say she's the one, you are shipping stuff, she's the one carrying the stuff, you are doing Amazon business. When you receive your supply, you have to pay somebody to go take them and go drop it to the UPS warehouse. You have to pay somebody to do that. Let's say you are paying your child. So my point was that those are mistakes that you are making. You are making that you will never save money by keep making those mistakes. Okay? So yes, if you are really serious about it, you are serious about start doing the opposite of what you're doing. Do the research. Do the research. Record your transaction. This is the first thing. The first strategy on tax saving is to record your transaction, because every strategy we want to tell you, if you don't record it, you cannot claim it. It's to record it. Now, do not hide your income. Do not hide your income. Hiding your income doesn't help you that much.
Excuse me.
Yes.
Yeah, when you say recording your transaction, to prove that you have to have a receipt, right? Or you just have to, if you spend money to do something, you just have to write it down, or you need to have a receipt to prove that, in case the IRS maybe ask you for proof.
First of all, yes. First of all, you have to write if the transaction happens. I'm saying that when I say record, I'm not asking you to go there and sit down and start writing stuff on the paper, right? If the transaction happens, write it down. Now figure out how to prove it. How to prove it is what? It's the receipt. It's the bank statement. If you use your bank, you first of all write it down, because they will never ask you to show all the receipt. That's the point. But they want to see if it's written down somewhere. You see the point? They will never say, even until of the audit, when you show all your bank statement, you have $100,000 transaction. Nobody will ask you to show the proof of all the 100,000 transactions. No. They might pick 1 or 2 of them. Can you show me the receipt of this trip that you made to Ohio? What did you go there for? Of course, you have the receipt. Now, in your accounting system, you can actually even create your own receipt in an accounting system, because you really spend the money. If you don't have the receipt, you can create it, because you still remember if you went to the hotel. You remember the hotel you lived in, right? You can put those information. If they call the hotel will confirm that yes, the person stay here for 2 nights for a seminary. Yes, that's the point. You can create your own receipt in your booking system, basically, right?
Okay.
Yeah. So I don't know if you have more question. If you don't have more question, I'm going to shift on this. This is too long. Shift on this and just remind you that about for the people who apply for the PPP. Now I'm shifting a little bit for the PPP. The PPP we ran last week. We ran last week a webinar like this one on the computer, where I was explaining to them how to make the PPP money free. The PPP, Paycheck Protection Program, is a program that gives people loan at 6%, right? That 6% loan was given to people at 1% instead 1% loan for 60 months. Now the government also told you that there's a way for you to make it a grant, to make it free. So it comes to prove this point here. In order to do that, you have to have a record keeping of all the expenses of the money they give you. So many people in this meeting now receive that money, right? So many people here receive the money. Now you have to make it a grant. In order to make it a grant, they want to see where you recorded your transaction. But now you're not going to go and hire an accountant. Of course, some people. I'm doing this for some businesses that are so big to do by themselves. But if you are self-employed, you only have 1 or 2 employees. You don't have to hire a bookkeeper and pay him $300 a year, a month, only to do that. How much money did you receive? You didn't receive $300 a month. I don't know how much you received. But you still have to keep it, or to show them, the government, when you spend the money and what did you spend the money on. So we went through what I was calling. We went through what I was calling last week PPP expense tracker. Expense tracker. We went through this. This is a spreadsheet that my team and I recreated to help all the PPP recipients to show the government how much they spend the money and how much is eligible, because you spend the money doesn't mean that money is forgivable. Because they tell you how much, where you should spend the money on before the money is forgivable, right? So we create that spreadsheet, that magic spreadsheet. I call it a magic expense tracker, because you only have to plug whatever you did with the money, plug the number inside the spreadsheet, and the spreadsheet will tell you the result of what will be forgivable and what will not be forgivable. Let's say they give you for $1,000, you spend $300 on your iPhone, you spend $700 to pay yourself, and you plug all of them in the spreadsheet. The spreadsheet will tell you that, oh, out of the $1,000, only $700 will be eligible. The $300 is not eligible. You have to pay it back. It's a loan now. You don't know what is eligible or no, or you even use the money to pay for your rent, and you are a self-employer. You're doing online business. That means you don't have a separate location. You have your own house. You just put the spreadsheet. The application will ask you to provide how much you pay for rent, how much you pay for electricity, and now it will ask you, what do you think you use? What is the percentage of usage of your house? When you tell them, the spreadsheet will actually find the percentage of all your expenses for house related, and get a percentage that belongs to the amount that is forgivable. So this is actually what is going to happen. It will show you the result, and will tell you how much will be forgivable and how much will not be forgivable. And there's the PPP can be two rules. The first rule was 70-25. That means 70% is allocatable to pay yourself. And you actually show how much you pay yourself on it. You have to show how much you pay yourself, how much you pay on other expenses. And the other thing is that when you finish it, you will happen that you surprise to see that not the money is forgivable, but you spent the money a long time ago. What do? You assume that you didn't finish spending the money, and you keep spending the money on the next spreadsheet that goes for 25 weeks. So I provide all of them, right? And yesterday, I think it was yesterday, actually people start asking me, oh, how to get that, Okay, I was waiting. So it's actually available on my Facebook page. You see it. Somebody contact me about that today. You see it. You can contact it. If you receive $5,000 or $3,000, do you think it's worth it to do something to keep the $4,000 for you, or do you think it's worth it to do nothing and just pay the $5,000 back to the government? You think, okay? So yes, I have it available over there. And this was the last point. The next point is that for EIDL people, we created a group where I'm providing information about the ESBL recipient and PPP. We create two groups, one group for English-speaking people and one group for French-speaking people. That's the reason why you might see two groups, two PP and EIDL group. Okay? So most of the time, you know where to go to. Either way, you will see the same information. Now, recently, a lot of people now are receiving emails from the SBA requesting for more information. requesting for more information. That wasn't the case. That was the reason I went on live a few days or a few weeks ago to let you know that, oh, I think this money is running out, because now they are asking to provide your green card, to provide the proof of the business, to provide, you know, that we show and stuff like that. So I think that this money is running out. So what I'm telling you to do is, this is what to do when you are request for it. I explained it in so many lives. Now the new thing is that some people are even seeing that the money that they were eligible for is declined. That means you were eligible for $20,000. Now we check your Polo account. We see that now is zero. Right? It's zero. And now it comes back to what I was telling people, what I was planning, in case you receive a denial letter, this is what you do. Because so many people, when they saw it, it was yesterday, three people contacted me because of that. Actually, we checked it together. It came back to zero. I told them, remember what I was explaining, in case you receive denial letter, decline letter, this is what you do. I'm pretty sure if you didn't pay attention to that, now you will see that you are concerned, right? So when we are doing something here, everybody, so yes, people are receiving it. When you receive that, there's no panic. You call the IRS, the SBA, they will tell you no problem. What you receive the letter, this is what you can do. Before you receive the letter, I'm telling you, if you check, if you don't have your credential, contact me and give you the credential. Or you can actually reset the password and access to your account to see how much is still there, because you are normally supposed to receive a confirmation or approval level. That's the last level you have to receive. If you're waiting for it and you check your account, you see $0 on it. Just prepare in case you receive a decline level. Prepare this documentation. I'm not going to explain to that because it's in the Facebook group. If you belong to the Facebook group, you will see what you should prepare for a request or a consideration. So I don't know if you don't have no more questions. I hope you enjoyed this live, and contact me. You have any means to contact me by WhatsApp. My phone number is everywhere. My Facebook is open. If you have any concern about everything that we said today, I'm so much open. Yeah, what's up? Please.
Yes, about those two groups, PPP group and the EIDL group, where are those groups? Are they on WhatsApp or Facebook?
No, Facebook group. Those are, don't you belong to the Facebook group?
No, I'm not.
Who is that? Is that Brice?
Yeah, Brice.
Brice teacher or something?
Yeah, Brice teacher.
But teacher, Brice, back down. Don't know if they are speaking English speaking people, you are able to first be. Okay, go into my Facebook group, in my Facebook page, and or even on the WhatsApp. I have sent it. I individually copy the link and I've sent it to people. I said this is the reason why we want to gather all the information in the same place.
Because I have all your information right here.
Yeah, are you in my Facebook group? Are you my Facebook friend? Are you in my Facebook? Hello? Please.
Yeah, hello? Can you hear me now?
Yes, I can hear you. Are you in my Facebook? Do you have my Facebook link?
Yes, I have your Facebook.
Yeah, go into it. Type SBA, PPP, and EIDL. Let me write it down here. You will see the group. I think I'm the only group on Facebook who has, only person on Facebook who has a group like that. Facebook, SBA, PPP, and EIDL. Recipient.
So is that the link to get access to the WhatsApp group?
No, I don't have WhatsApp group. I'm talking about Facebook group. On WhatsApp, on WhatsApp, I just send information to people individually. Maybe eventually I need to I need to create a WhatsApp group because.
No, I mean that group on Facebook, I already signed it.
Yeah, no, I'm referring to the Facebook group. Maybe I have to create a WhatsApp group too because if you remember, every day I have to send you the information individually. I have to send to almost 300 people. Can you imagine? I'm actually creating an application to help me broadcast all this WhatsApp text message. I have to do that manually to people. Yeah, maybe I'm going to create a WhatsApp group for that to help you see. Yes, and the group is not only for this. The group most of the time I send opportunity of grants. especially for New Jersey. Since I live in New Jersey and New York, most of the time the hundred I post is for New Jersey and New York. But I'm gonna start thinking about other states because I'm working around people in at least 21 states in the group. So I'm gonna start thinking the group is mostly not only for PPP because the PPP is over now. What we are working on now for the PPP is for the forgiveness. We are working on the forgiveness now. If you receive the PPP money, you have not started the forgiveness process. And the first step of the forgiveness process, I said that on one of the live, is to track all your expenses. Track your expenses to know if today, if you have to apply, how much will be forgivable and how much won't be forgivable. Once you know that, you know what to do to make more money forgivable. Somebody told me I used the money to buy the new car. It's not forgivable. Yeah, you spent all the money. Now assume that you didn't spend the money. Now, okay, I'm not going to explain this now because I told them about it. You spend the money on the car, 4,000 out of the 10,000 you receive. That 4,000, if you apply, you will get that. Assuming that the 6,000 were spent on eligible money, you use this magic PPP tracker, you will know that you still have 4,000 that you have to pay back. Now you have to incur those money, and I will tell you how to incur. Incur just means that every week you account for it because the money is into your bank account. Account for expenses that is not car related. Maybe it could be your rent, it could be utility, it could be paying yourself. So account for this. Account for the money. At the point of that, you reach the $4,000, and whatever you account for it, you put it in the magic expense tracker. You will see that the non-forgiveness amount will reduce until it becomes zero. Okay, so this is the reason why you have to do that. Otherwise, you will start receiving the bill that you owe the money because the money was given to you as a loan, right? You actually print out the copy of a loan, and you know that you have to pay it back. You don't have to pay it back. Try to do it.
So I have a question.
Yes.
Like for people who are driving Uber and who are actually renting car.
Yes.
The monthly bills that they pay on the car, is it going to be forgivable or not?
It's forgivable. It's an expense. It's an expense related.
Okay.
It's a business related. Yeah, you could use it. So take the spreadsheet where you say rent, drop it in there. You say rent. You rent in the car, right?
Yes.
Yeah, you rent in the car. Just drop it in there. So yes, it has all the rubric, all the things that you should put in. If you don't see something there, it might not be forgivable for you. Or there's a transportation there also. So yes, if you don't have more questions, I'm actually a lot over the time that I anticipated on this thing. So you guys.
So Russell, yes, for people who receive the EIDL, what are they going to do next? Like, when are you going to start talking about?
Okay. The next week I will tell you. So remind me, guys. Remind me by text message or in the group, in the Facebook group, that next week we talk about what to do. And I started talking about it last time. What to do with the EM money that you receive. What to do. Because even the EM money is given to you as a business. Now, if you're going to use it for personal use, how to make it happen? How to make it happen? Right? You use as a personal expense. I'm guessing you are in the closed room here. You're not supposed to do it for personal expense. But now, how to make it happen? You have to consult. You have to talk. Next week, remind me, guys. Post that in the Facebook group. If you're in the Facebook group, tell us, please. Don't forget to talk about this on the next topic. Okay? Yes. I talked about a little bit in one of the life in the past. I'm saying that because I know exactly. I have somebody who got his bank account garnished because he didn't know how to use the money. They give it to you as a loan, as a business loan. If you want to do it to purchase a house, legally you can do that. But there's always a way around. Right? It's just like taxes. Normally you should pay taxes of this amount, but the law can also put the way that you can pay $0 or the less tax possible.
Is there any percentage of that money can be forgivable?
No. The EITL is not the PPP. The PPP is a program. The EITL is different from this. But they can tell that no, you are not even entitled to receive the money, right? Because normally you receive the money to help you with your business, to buy a new car, fix your new car. You are Uber driver, the old car is so messed up. Yes, you have to buy a new car with this because your Uber car is not working no more. Yes, not that you're going to buy your new Mercedes. No, doesn't count, right? Doesn't count. Or know that you're going to get the money and do a transfer of $50,000 to your girlfriend or so on from the money they put in your bank account because on EITL. No. If you want to do it, now you have to know how to do it. Okay? Yes. Okay. So basically, I think we don't have more question. And I'm going to thank you guys for being here. Oh, last question?
Hello, sir.
Yeah.
Yeah. On the second loan about the PPP, I think I sent them on it, and it was declined this morning. I don't really know the reason.
Who is talking? Oni. Yeah. You said the money you were eligible, right?
Yeah.
You were eligible. Now you received an email that it was declined.
Yes. The reason I can't figure. I was able to figure it out. So
yeah.
I copied the email.
Yes, and what we're going to do tomorrow is Monday, right? Let's call them.
Yeah.
Because while you're eligible, the money is already there for you, basically. The money is there for you. You just have to contact them. Those are people working. They are making mistakes. That's why we need to consider. They are making mistakes. I saw somebody who has a decline level. At the end, they send you a new link to even reapply to get this money. It was a EITL, same thing for PPP. I had somebody who has the money hold for 1 month because they were asking for.
I got the money for the PPP, so I wonder why the other one was declined.
Oh, you will send money for PPP, right? So you're talking about EITL. You're talking about EITL?
Yeah.
Okay, that's what I said earlier. You see the EITL money. People who are in the process, they even see the money eligible. They are receiving a $0 in their account. So what you need to do is to contact them. Because worst case for you to get denied is that they send you an email to request for more information. And you don't provide those information. Right? Let's say they send you an email to send the copy of your taxes. To send maybe the green card of citizenship, proof of citizenship. To send
I mentioned that what they requested for I will be with you tomorrow so that we can speak together.
You have the link. Book an appointment on my booking team link that you have so that we see that on your system so that we can work. Because I will say yes, but by the time you come in, sometimes you call me, are you home? Are you staying? I say yes. Sometimes I will be busy with other people. So book an appointment, we can talk about it. But in general speaking, if you didn't receive a letter saying that you have to provide this and that, and you didn't provide that at all, and you see that there's a $0 on your account, or you receive a decline level, you have to contact them, and they will tell you what else to do. Maybe you will just need to finally submit physical information like your taxes, KGC, green card, travel license, and a copy of a transcript, stuff like that, to them, for them to release the money for you, to leave the money for you, because the money is already there. The program didn't end yet. All right?
I will do that. I will book appointment today. We'll do that tomorrow.
Yes.
Thank you so much.
No problem, man. Any last question? Okay. So if there's no last question, only join the group. Join the Facebook group. I think I'll send you the link. Join the group. You guys send the request because sometime during the week I may have some question. This happened during the week. I didn't plan to do this today. It's during the week that I thought that, you know what, it's going to explain my people about this one. So if I receive more requests about something that you have to talk about, I may scared to talk about that. So you have to post in the group that we should actually remember to, or maybe include that into the agenda for the next week. Okay? So you guys in the group, in the Facebook English speaker or French speaking group, post in there to say, please do not remember to talk about it on the next thing. Yeah. So if there's no more concern or question, thank you guys for being here for this live. And it was a pleasure, and it will always be a pleasure to serve you guys.